Today, we will continue our trading journey by using our best scalping strategy with our best trading view indicator. As you know, markets are not easy to trade nowadays. Selecting right assets are quite important as well as trading rallies or crashes. If you are ready, let's do this. With the start of 2026, we are finally starting to see much clearer price action after that really rough December. By using our simple ICT high time frame indicator, we can once again spot some very solid trade zones to look for great entries. Especially this multi-imbalanced area in the middle, I've noticed that many followers on Twitter picked up on the same idea. On top of that, we also have these very clear SR flip points that helps us pinpoint specific entry locations. And if you look at the overall price action, we are clearly in an uptrend right now. Price started around from 87K and has been rallying up towards the 93K area. So now let's drop down to the lower time frames and talk about what we can actually do with a chart like this. From the higher time frames and by using our indicator, we already know this is a multi-imbalance area with an SR flip location that offers a strong trade opportunities. And right before our entry model, you can see these very clear equal lows, which can act as a perfect inducement point, which is also called IDM. So overall, this trade area is a strong field location and one of the best possible zones to look for a clean and clear setups. So what we are going to do next is zoom into this area and talk about how it can actually be traded. First of all, you can clearly see the market structure break right after the price pushed strongly into our solid entry location. So probably the simplest and the most straightforward way of trading is jumping into a trade right after the market structure breaks and setting a stop loss that is large enough to handle possible deeper pullbacks later on. Your second option is waiting patiently for the pullback so you can aim for a better entry and a higher target with bigger potential rewards. And if you look at the multiple other time frames, you can clearly see that there are some great imbalance points that can help you time your entry much better. And finally, your last entry model could be waiting for a couple more confirmations before entering the trade. For example, you might wait for the first break of structures and then wait another structure break right after that. So double structure breaks usually mean that the price is now trending. We have a much stronger confirmation to work with. These were your three basic and the most common entry models that you can use in trading. But I always get the same question from traders over and over again. I cannot sit and wait in front of the charts all day for my entries. And I get it because this is a tricky and very time-consuming process. If you do not wait for proper setups or a clear structure changes, you are basically limited to one kind of trades, which is the cost averaging methods, and nothing else. For example, there are three very good areas on the chart where you could place your limit yo-yo orders. The first one is the level of inducement, which is the equal low area, because price will probably crash down and sweep this zone before making a strong move. Then you can place another limit order inside your SR flip zone as well. And your final order could be placed at the fulfillment of the inner imbalance area for extra precision. So when you trade any type of cost averaging or scaling based strategies, you also need to have a clear mental stop loss in the place. For example, imagine all your limit orders get filled, but the price does not react at all and just keeps crashing through the area. In that situation, you cannot keep cost averaging forever, especially in trading. and there must be a clear point where you stop yourself. There should always be some limits in place where you mentally decide to cut your losses. For example, if all the structures in this example, bullish structures, are broken and price is not moving in your direction at all, that is your biggest and clearest clue that it is time to cut the trade and walk away. Okay friends, another great lesson ends here. Please stay safe and sound. Be ready for the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free TradingView indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.